Finally, we're going to take a look at the contents of corporate. So an annual report is supposed to summarize operating activity for the past year and have plans for the future. So typically in an annual report, you're going to see management's discussion and analysis, which will be some commentary from the company on how their operations went. So this would typically be text. We had a strong year in sales in North America and Europe. That would be something you would see in management's discussion and analysis. Or, we had a challenging year in the United States, but we had a strong showing in Canada and Argentina. That would be management's discussion. There'd be a report on internal controls. So remember our chapter about internal controls a couple weeks ago. Management will have to submit a report on internal controls. And that's usually signed off by an independent auditing firm who tests the company's internal controls. There's also a report on the fairness of the financial statements, which is also issued by an independent accounting firm who does the audit of the financial statements. And they'll give an opinion on what they think the fairness of the financial statements are, and if they believe that there's. So management's discussion is a critical, assessing the future of the company. So what it is it's the context behind the numbers. You can look at an income statement, a balance sheet, cash flows, a retained earnings statement, but this provides the commentary behind it. And they talk about past performance and the financial condition. They talk about the future also. And also they should discuss risk exposure. So if there's something pending that they think could bring some risk to the company, it should be. The independent auditor's report. Publicly traded companies have to get an independent opinion on the fairness of the financial statements. So they have to have an independent auditor come in. So in bigger companies, that's like your Ernst & Young, your Deloitte, your PricewaterhouseCoopers, KPMG. Those are your big four independent auditors. So the opinion of the financial statements is in the annual report, and there's also an opinion based on the accuracy of management's internal control assertion. So if management says internal controls are good, the independent auditor also comments on management's statement that internal controls are good.